ACCA likes to test several standards in one question. And with IAS 40, we can make combinations with so many different standards. It is SBR made easy, and I'm Lilia Kirilenko, SBR tutor, who has had pass rate of 100% of your group, and I'm going to tell you what to look out for with this very standard. With IAS 40, we know that it is applied to investment property. It is highly unlikely that at this very stage they are going to test you whether, let's say, machinery can be used, can be accounted for under this standard. Spoiler alert, it cannot, because it's just property, meaning land and building. So we are most likely going to be tested on the problem of the measurement. Because a company can choose whether it wants to measure the property using fair value method or cost method. And you may be asked to talk about the IAS 40 in conjunction with the Conceptual Framework. The Conceptual Framework says that the information should be relevant and faithfully presented. So you can be tested on relevance of the measurement basis. Let's think about it. If we have a company that bought this very property, building or land, and they have intention to sell it, then this means that most likely fair value method is going to give the most relevant information, because whatever the company can get from the asset is going to depend on the fair value. Or if a company leases out this very asset on the short-term lease. In this very case, of course, if it is short-term rent, then we are very subject to the changes in fair value, because the changes in fair value would reflect the demand and the goodness of this very property. And as such, if the fair value of the whole building, the whole land is going to increase, then also the rental incomes are going to increase. But if we bought this very property and we decided it to lease out on rather long-term contracts, and we are going to have a rent that is fixed and so on, and we're not going to sell it, maybe cost method is going to be more appropriate. Yes, well, in here I would remind you, though, that when we're talking about IAS 40, it is in very good relations with IFRS 16 leases. And with IAS 40, our side of the story is that we are a lessor. And this means that we will need to decide whether this very lease is operational or financial. And if the lease is financial, then we will have to dispose this very asset. So when I am signing a longer term lease, I mean longer term, but not for the majority of useful life, not the lease that transfers the majority of benefits and risks to the lessee. So we can be tested on IAS 40 together with the Conceptual Framework. What else? The standard says that we need to decide how to account for the investment property at the inception, so when we got this very asset. And what happens if our intentions are going to change? So can we move from cost model to revaluation model? Can we move from revaluation model to cost model if we decide to change the use? This is the question that I'm going to leave unanswered for today, and we are going to come back to it in our next episode that we're going to have about IAS 40. What else? Well, if we need to measure the fair value, then this means that we need to be able to measure it. So we have to apply IFRS 13. Remember, IFRS 13 is the special standard that acts as a guidebook on how to decide what the fair value is. So we are going to talk about an active market, level 1, level 2, level 3 of inputs and so on. So be aware that at some point of time, IAS 40 can redirect you to talk about IFRS 13. And that is another issue of our episode. And just be alert that the question often has several standards altogether. What else with the investment property? Well, we can lease out our premises to our subsidiary. And what's going to happen? Well, if we are producing consolidated financial statement, then our subsidiary is the same thing as us. We are producing them as if we were a single entity. This means that we don't use IAS 40 for this very relationship. We are going to apply IAS 16. We are going to treat this very property as owner-occupied. But if we're talking about the same companies and we're talking about standalone financial statements, then we're going to say, oh, it's standalone. So this is our separate budget. It's our separate accounting. So this means that IAS 40 needs to be applied. And in this case, we are going to use its provisions. Fun, huh? So IAS 40 may come as an easy standard for you. But look, this is the standard that can redirect you to very different standards. And I haven't even talked about the changes in the use. We are going to talk about IAS 40 later in some of the forthcoming episodes, so make sure that you subscribed. And if you are my student and if you are with my course, make sure that you attempt quizzes that make sure that you perceive the knowledge correctly. And I will see you next for more episodes on SBR Made Easy. Bye!